Hello everyone, what's up? It's CF Crypto TA, also known as Crypto Dunk, and we are here today to talk about Bitcoin and what is going on. So we just came through a crash, a flash crash, not long ago, a few days ago, and now is the time to talk a little bit about what is happening with Bitcoin and how is performing. So now you all know my view, and I talked to you about this for so many times. I'm a Elliott Wave theorist and technical analyst, and as you can see here, we have wave one, wave two, wave three, and now we are in wave four, and I was expecting wave five to unfold really soon. I was actually expecting this one to be already wave five. However, after analyzing further this price action, I came to the realization that actually this one is not the starting of wave 5, but actually we are still in wave 4. So we're still correcting this wave over here. Now, what we know so far is that Ralph Elliott has explained to us by obviously studying for years and years and years the market is that we have this recurrence of golden ratio, which you can find also in nature, in waves as well, in wavelengths and retracement. So he found that wave 1 usually retrace between 0.61, 0.5 and 0.786 when it's very, very, there are very bad news or catastrophic events, then it will retrace around 1 and 0.786. In a normal market, would retrace between 0.5 and 0.618. So as you can see here, we have a retracement to the 0.786 of the Fibonacci retracement tool. Now, if we look instead of wave 3, which is the one over here, it says that usually the price retrace between the 0.236 if it's an extended wave and the 0.382. So the 0.382, as we can see here, it's at 21,600. And then the 0.236 is exactly where we bounced off the last time. Look, it looks like a coincidence. It's not. Okay. Now let's see 1 second if we use the line chart, because Ralph Elliott wants usually use the closing price of the market. So we look at the 0 point here, there, and look at these guys. I mean, how precise is? It's not even what 1%. Let's see, 1% different, maybe more. Let's see. Hey, yay, yay, yay. So that's a 6% difference from the actual target. That's pretty damn good in cryptocurrency. Now, let's actually look at what happened lately. We know that there was a fairly good crash, and we want to know whether we are in a bear market or not. Now, let's use some of the traditional finance tools, and we're going to use some of the moving averages here. I already prepared them. This one is the 200 moving average. No, sorry, the 50. But this one is the volumated, so we are not going to use the volumated because I want to use the simple one. Let's put it on. This one is the 12. We'll look at later. Let's use this one over here. Okay, 20 and the 50. Where is the 50, guys? Yeah, this one is the 50. So we have here the 100 in green, we have the 20 in blue, and we have the 50 in red. Now, what we know is that usually, if we don't look at the price, okay, the moving average tell us the trend of the asset. So how is the uh, asset performing over time? Now, when the different moving average are fan out, so they're spread out like these here, the trend is clear and is clearly moving in a certain direction, which could be bearish or bullish. In this case, as you can see here, we have nice and spread out, and is a bullish market. Same here on the weekly. We have a nice and spread out, and we have a bullish. And now here we have a slightly deviation of the 20. However, as you can see, the 50 MA and the 100 MA, they still pretty much straight upwards. So which is telling us that the in the 50 MA, the fair price of Bitcoin is exactly where we are now, and is still going up. So over time, it means that either you put money here, you put money over here, or here, or here, or even here, you're still making some profit. Okay. Now, also, as we know, the moving average, they can work as a support or resistance. So they are dynamic supports and resistance. You can see here with the 20, and this one was a really great example. Back in 2016, 17, and the bear market of 18, you can see that the 20 was clearly a support for the whole wave up. And then this one is on the weekly, so the 20-week moving average, and it was also a strong resistance on the bear market. Now, during this third wave, what happened is we deviate quite a bit from the 20 MA, and we had this flash correction over here, which brings us back to the 50 MA, which is providing support. We found support here, we found support here, and now why we are not completely bearish yet is because it's still supporting the price. Okay, the 50 MA is working as a support. We can see this similar behavior in the early start of the bull market in 2016. We see the price try to touch the 100 MA and also the 50 MA, and here the 50 MA. This is a similar action that we have. We can see here the 100 MA. We just had a straight sideline moving average, which was crossed by the 50 and the 20 MA, and it touched the 50 MA. We can see here, obviously, here we are fan out, and now we are finding support on our bullish trend on the 50 MA. Okay, so this is the first bullish sign that we can gather from the data that we have on our chart. Now we can see also the volume, and we can see that the volume is not really high in case of this correction. You can see here we have a strong correction with a really high volume, but here the volume has increased, but overall, as you can see, during the correction, the volume is actually drying. This is a sign that there is not much participation, and also there is not much selling pressure on this wave down. Now, let's actually look at the price action. Now, let's look for some possible price pattern. Now, we back in September, October, I have posted a few times this pattern over here. Let's take off 1 second these three averages. We're gonna leave just the 50. I put this pattern in place, which it was a head and shoulder, or someone he was talking about a wedge. Someone else he was talking about a cup and handle from here, okay, over here. Nevertheless, is not important. We can see that there was a resistance over here, which when we broke out, it showed a strong reaction on the upside. And this one was if we took the tool over here to measure from here to we measure the depth of the of our price pattern. We put it on top over here, and it gives us the target. So the target of the price pattern was around 73,000 for Bitcoin. However, we were shy of a few $1,000. Nevertheless, we are correcting now, and we are actually correcting on support. So the resistance, once we break above the resistance, okay, this resistance often turn support. So we have the resistance over here, the price, touch it, bounce off, okay, break above, and when I break above, it goes to test the previous resistance, which it turns support. If it's validated, then the price bounce back, and it continue is a price action on the upside in this case. So sorry for the terrible draw. However, I guess you understood the concept. Now, another um, reason why I cannot be completely, I mean, not completely, I cannot be bearish yet, is also the fact that we know that, and I explained it to you already a few times, that usually uptrend markets, okay, so when you have a bullish market, is when the price for a series of higher high and higher low, higher high, higher low. This is the one-on-one definition of an uptrend, and the bear trend instead is a lower low, lower high, lower low, lower high, lower high. And you can see it here, and this one is the bullish and this one is the bearish. So we are right now still forming a higher high and higher low. So we haven't put in place yet a lower low, which would be around this area over here. Okay, so if we put a lower low around this area here, then we can start to be really bearish. Now, going back to our price target. Let me take off this one because it's terrible. Okay, now what we want to also look, we're gonna check for other supports, other possible supports, and we can see that we have here the end of wave 2, okay, and the possible end of wave 4 over here. We put these two, sorry, and here. I'm sorry, guys. I wrong. Sorry. So wave 2 and wave 2 of the new uptrend. And as you can see here, we put together two bottom to through, and we are now approaching with the price once again another support. So we have already here a confluence of three different support. We have the previous resistance which we broke. We have this the 2 years trend line, support trend line. Okay, let me go back to the candles, and we have the 50 MA, which is also providing support. Now, what we can use also is the anchored volumated weighted average price. This is working as a moving average. However, it takes in account also the volume. And if we look at the volumated weight average price, it's telling us that the average price of Bitcoin is around 45,880. Okay? Instead, if we take the low in June, what is telling us here is also telling us that the fair price of Bitcoin is 47,249. So we can see now, guys, here that we have a strong confluence of different important supports. So What is telling us? It's telling us that we can also expect over here a bounce, okay, a strong bounce, which will bring us to retesting possibly the 70,000, or either we break below. And as I said to you, this will transform this support over here in the next resistance. Okay, and we start the bearish market. Now, why I am more bullish than bearish right now? Still, I can always change my view if this one happen, if we break below. Now, why? Is because the weekly stochastic RSI is now turning on the oversold condition. We have also the RSI over here, which is approaching the old support and trend line over here. So there is little room, let's say, for uh, being bearish right now. Now, if we also look at other patterns, which are also important, we can go on another one that I showed you today in one of my posts. And we can see that here I show you a new wave counting. As I said before, I was expecting 3. This one was wave 4, already concluded here, and then starting wave 5. However, what Ralph Elliott tell us is that wave 4 or wave 4 should never enter the price of wave 2. So in this case, this wave should never go back into this price. If it goes, it means that we're still in a correction. So today I was doing my counting, and as you can see here, with I was expecting this one to be wave 1. So we have wave 1, 2, wave 3, which I was expecting to go much higher, and then wave 4. It would have become this one wave 4. However, as you can see, the price enter clearly the price action of wave 2, as you can see here. So we enter the price of wave 2. So considering this, we know that we're still in a correction. There are different correction, and we have the zigzag, the flat, which are the simple correction, and we have the more complicated one, and usually the combination, which can be the combination of flat and zigzag and triangle all together, or a triangle. What we know is also that we can expect a different pattern. Let me take off the volume pattern from the wave 2. We have in wave 2 a zigzag. So for law of alternation, we should have here a combination of pattern or a triangle. So now, what we can see here is that it looks like we are rather be or in a rising triangle or still in a expanded flat for wave 4. As you can see here, expanded flat is wave A, which is a 1, 2, 3. Wave B, which is 1, 2, 3, is slightly faking out above the previous all-time high. And then we have a 5-wave down. Now the other one is either, this is a rising triangle, and rising triangle is 5 waves inside of the triangle, with each one subdivided in 3 waves. So we have 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and 1, 2, 3. So what we have so far is 1, 2, 3 here. Then we have 1, 2, 3 here, which is also interesting that wave A here is the same as wave C, the length. And then now we have created wave C, and we need to see whether we create wave D and E and then continue or go down all the way down to 20K with wave C. So this one was everything from today. However, I still more bullish rather than bearish. I hope you enjoyed the video. I hope it helps you, and I'll see you soon.